Hey, everybody, welcome back. Let's talk about one of our favorite chip companies, or I should say, chip manufacturing equipment companies, Applied Materials. Before we jump into the most recent earnings, let's briefly go over where this company fits into the semiconductor industry. Applied Materials fits into the semiconductor industry right in the center. They supply the equipment that makes chips. They supply this equipment to foundries such as Intel, Global Foundries, Taiwan Semiconductor, all of the companies that make these highly complex semiconductors. Applied Materials is part of what we like to call the Fab Five, ASML being the largest of these companies, but Applied Materials following ASML right after that. Applied Materials is a generalist. When you're looking at the semiconductor manufacturing process, Applied Materials has a piece of equipment for just about everything that you see here in this whole manufacturing process. This episode is sponsored by our friends at public.com. Are you dissatisfied with your savings account? Check out public.com.
Public.com has just launched its new high-yield cash account, offering an industry-leading 5.1% APY. There are no fees, no subscriptions, no minimums or maximums, just 5.1 interest on your cash. You can transfer or withdraw cash as often as you like, and you get up to $5 million in FDIC insurance. Grow your cash at an industry-leading 5.1% APY with a high-yield cash account at Public. Go to public.com to learn more. And in the recent earnings, of course, like everything else tech these days, and maybe a little bit extra outside of tech, everybody's talking about AI. So there was, of course, some commentary about some of the specific equipment in manufacturing technologies that Applied Materials is enabling to help fuel this new era of AI, or I think we just really need to say more broadly, accelerated computing. So as for the earnings specifically, what you're going to see are some pretty lackluster year-over-year revenue growth figures. But remember, excluding accelerated compute or AI infrastructure, the top row in our semiconductor end market cycle chart, excluding that, the semiconductor industry has actually been in a severe downturn for going on 2 years now. And we're just at the cusp of the start of a new growth cycle for everything from consumer products like PCs and smartphones to let's call it more traditional enterprise computing and cloud, everything not accelerated computing, and then also auto and industrial and power chips. So the beauty of Applied Materials is throughout this downturn, they've been able to pivot to different parts of the semiconductor end market to address wherever they can get the most growth. And so while the revenue figure in this most recent quarter that ended in June doesn't look so impressive, bear in mind that many of Applied's competitors and peers have actually been reporting declining revenue and are just kind of getting back to break even or trying to get back to break even. Applied continues to actually put up new record sales and profitability because they were able to kind of sidestep the industry downturn.
Net revenue for this most recent quarter, you can see just over $6.7 billion, which is a 5% change year over year. Their earnings per share actually increased 11% to $2.05, up from $1.85. And then on an adjusted basis, you can see that the earnings per share was up 12%, and their free cash flow was actually down 10% year over year on an adjusted basis. Let's talk about that a little bit more in regards to their revenues, earnings per share, and their free cash flow.
Yeah, again, there's been a downturn for going on 2 years now, but you can see Applied Materials has barely missed a beat during this period. Free cash flow, yes, down 10% last quarter, but that can be a pretty lumpy figure from one quarter to the next. Year to date, free cash flow still up significantly from where it was a couple of years ago. And of course, earnings per share also up significantly. As this industry approaches this next wave of cyclical growth, Applied Materials revenue and earnings should heat up again.
A lot of focus has been placed on increasing the speed of these accelerated computing chips, hence the name accelerated computing chips. But CEO of Applied Materials, Gary Dickerson, said that there's been a shift in focus from leading AI companies. And he said that They are telling us that reducing power per operation is now more important than increasing operations per second. Nick, why is that?
It's all about energy efficiency or operating cost. Basically, what does it cost to operate these semiconductors over the long term? So, these accelerated computing servers, especially getting installed into big tech data centers, cost a lot of money, billions of dollars being spent per quarter per company. Microsoft, Meta, Amazon, Google, all in a race to purchase these things from NVIDIA. But the real cost can be over time in fueling these things with electricity to power operations. And so while over the last couple of decades, there's been this massive amount of focus on development of the actual semiconductor wafer, those are the silicon disks that get chopped up into chips, a lot of emphasis placed on those with lithography systems from the likes of ASML. But as we kind of pivot to this talk of, hey, we need to do, yes, more operations per second, but we need to do those more energy efficiently, we're seeing this pivot to materials engineering, not just the lithography part of the manufacturing cycle.
And there's a few ways they're increasing that power efficiency. You can see with leading edge logic chips, there's high performance DRAM that goes into them, high bandwidth memory, which we've talked about a number of times, and advanced packaging to get everything together in these complex systems. So, how is materials engineering being focused on at Applied Materials?
Well, make no mistake, lithography is still very much an important part of this step. But in a video last week, we talked about ASML's new high NA extreme ultraviolet lithography machines, the EXE 5000. Each of these things cost upwards of $400 million each. It's an expensive piece of equipment as the feature size of chips, that those microscopic little transistors get down to 3 nanometers, 10 nanometers. We're talking about just a handful of atoms thick. A lot of companies are not seeing the price to performance increase that they need to justify doing just lithography anymore. And so they want to look at other ways to increase the performance of these chips and the power efficiency of these chips. And so it doesn't matter what part of the computing system we're talking about, logic, memory, packaging, whatever the case, a lot of these companies are starting to take a second look at developing other parts of the process. And one of the things Applied Materials has been doing in recent years is taking a lot of these different process steps that they enable and combining them into one big giant machine. So a couple of examples they have pictured here. For example, there on the right, the Endura IMS, you can see multiple different manufacturing steps all in one machine with those different chambers oriented in a semicircle there. Lots of different deposition steps in combination, deposition being that part where you add a new layer of chemicals on top of the wafer surface. So a lot of Applied Materials customers getting good bang for their buck focusing on this instead of just lithography.
Applied Materials also expects that advanced packaging portion of the business to grow significantly, including high bandwidth memory. They expect it to grow to 1.7 billion in 2024, and they believe that that business specifically can double in size over the next several years as more heterogeneous integration becomes more widely adopted and they introduce more solutions to increase their addressable market. We'll link a video to Micron, who provided a visual of what this looks like when they're stacking these high bandwidth memory chips onto the package. That's just one example of how advanced packaging allows for more complex chips to get on these small, tiny packages that are needed. But Nick, we ran into a question regarding Intel because Intel, as at least as far as we're concerned, is quite the mess. And I think more and more investors are agreeing with that, but their capex has been lowered because they're bleeding cash right now. They're hemorrhaging cash trying to get these foundries up and running. They've spent a ton of money on ASML's most advanced machine. How would that affect Applied Materials?
Well, at this point, Applied has not changed its guidance for their fourth quarter of this fiscal year, which will end in October here in just a couple of months. So that's the good news. And Applied has lots of other customers besides Intel. In fact, Taiwan Semiconductor Manufacturing, TSMC, was mentioned in the Q&A section of the earnings call as being more than 10% of revenue in the last quarter. TSMC is doing just fine. They are not bleeding cash. In fact, they have tons of it on balance sheet and pouring in every single quarter. And so they are more than capable to continue spending on these advanced manufacturing technologies. So Applied Materials in aggregate, their customers are very healthy. We're still, again, at the cusp of multiple transitions to new materials engineering cycles, two that continue to get bandied about on these earnings calls: gate all around, or GAA, a big switch in the logic transistor shape, and then also backside power delivery, which separates the delivery of the power to the chip from the actual data signal. Just two examples of materials engineering where customers are still investing very heavily in the stuff to get it ready because it helps increase the performance on a power consumption basis for their end semiconductor customers. So Applied Materials still very healthy. And we think fiscal 2025, while they haven't provided specific guidance yet on what the financials will actually look like, we're still very optimistic that Applied perhaps returns to some sort of double-digit revenue growth and earnings will kind of follow suit.
What you're looking at is the high NA EUV machine from ASML. This is their most advanced machine. This is one that Intel has taken delivery of this year. But to make this machine actually useful, you need a bunch of other pieces of equipment to be in the fab around this to make actual usable chips. And so Applied Materials is going to be a big beneficiary of the advancement of semiconductors.
Yeah, that's right. And ASML has said 2025 is going to be a banner year. They're expecting significant growth in lithography equipment. And so again, just to drive that point home, yeah, maybe Intel doesn't spend as much on that equipment as they expected to in recent quarters as their revenue streams kind of dry up. But the world has this insatiable demand for chips. They're going to come from someone, probably TSMC. And so someone will buy that equipment from Applied Materials to surround those lithography machines with the other machinery needed to make those chips. And so this is why at the beginning of this year, late 2023, we said there seemed to be a real disconnect in what Wall Street was expecting for Applied's earnings growth. The blue line is their trailing 12-month price to earnings ratio. The orange line is the forward expected 1 year forward price to earnings ratio. They're the same and have been for the last year. It seems that a lot of investors are not factoring for much earnings growth for Applied Materials in the next 12 months. We said that that was a mistake. And lo and behold, you can see the GAAP diluted earnings per share growth through the first 9 months of this fiscal year ended in July of this year. And so we think something similar is going to take place in 2025 as well, as revenue accelerates, as we reach this inflection point, as the new growth cycle begins for semiconductors, and earnings per share will grow perhaps even faster than they have in the last year when revenue was, pretty modest.
So based on that valuation that you just showed us, Nick, on a forward basis, the stock for this type of business, an industrialist, doesn't seem particularly cheap. And there are some other risks that we've talked about a couple of times on the show. There is some litigation going on with Applied Materials. Has there been any more discussion about that in recent quarters during the earnings calls?
Yes, for the last couple of years, Applied Materials has been under investigation by the feds for the potential illegal sale of some equipment to China. It seems like it was Applied Materials, one of their subsidiaries in South Korea, that potentially caused this. We have very few details. We don't know how big of a deal this will be, if it will be a big deal at all. So still waiting for that final outcome. Again, though, this is not new news. It's been going on for a couple of years. We're just going to have to be patient and see. But to your point on the valuation, yes, this stock is not as cheap as it was in 2022 and 2023, when it was definitely a long-term value. After the recent pullback from all-time highs, I think we're of the opinion here that this looks like a good, fairly valued price at this point, if you assume for a heat up in the business as those customers, as those fabs ramp up their CapEx spend in the next year or two. Beyond that, I think we're more than happy to continue holding this stock in our portfolio for the long term on the assumption that we have at least a decade of companies trying to increase the power performance of all of this accelerated computing infrastructure that's now been installed.
Long runway for growth for Applied Materials. Thanks for watching this episode on Applied Materials. Make sure you're subscribed to the channel and check out our Semiconductor Insider. It's just $5 a month. Gets you access to our Discord channel, which has our video notes or show notes, as well as live Q&As over there on the Discord channel. Make sure you check out our sponsors as well. We have public.com. We have 20 free stocks from Moomoo available still. So check that out. That's only till the end of this month. We'll see you all again soon at Chipstock Investor.